For every long-term investor, the goal is to earn massively from investing over a long time, to make enough money to cater for your needs in the future. One thing is almost certain: Tesla could one day be the world's biggest company, bigger than world-leading companies like Amazon and Apple. Suppose then that Tesla eventually gets to the point in the future where it's this big. Imagine how much money its stock is going to be worth to investors and how much they're going to make from its shares in the EV company. Hey guys, welcome back to Everything Tesla Stock. Tesla stock is currently trading below $250 at the time of this video. Probably not the typical share price to finance a stable retirement in the future. However, Tesla has actually got the potential to be worth a lot more in the future. Tesla has made several headlines in recent months, especially as its stock price has been on a downward trend. While some stock analysts may believe that Tesla stock is overvalued, there are reasons to believe that it is a good investment, good enough to yield massive profits for the retirement fund. So, suppose that you invest in Tesla now. How many shares are you going to need to conveniently retire by 2030? More to come in this video, but before we get going, if you like this type of content, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on all our future videos and everything going on with Tesla. Tesla has a good market share in the fast-growing EV industry, even as more companies are coming into the industry. The car company has maintained its market share over the years, and it could be expected that it's going to dominate even more shares as the industry continues to expand. Unlike some other EV companies that struggle to keep up with their profitability, Tesla has proven to be a highly profitable business, making its stock a good investment to hold for the long term. Aside from being a top-rated car company, Tesla also ranks highly in terms of batteries, superchargers, solar technology, AI, and more. The car company is technology-driven and has one of the most advanced software industries in the world. Although a large percentage of Tesla's revenue comes from its cars, the car company also earns a lot from these other ventures. In 2021, Tesla had a net income of $5.51 billion, marking a 665% increase from its net income of $721 million in 2020. Also in the same year, Tesla earned about $1.46 billion in regulatory emissions credits, and its Powerwalls, Megapacks, and Solar Roof accounted for $2.78 billion in revenue according to Tesla's financial reports. Aside from the company's already existing businesses, Tesla is already expanding into new areas of growth, such as the Tesla Bot, Cybertruck, and FSD, and a potential robotaxi business, all of which are expected to boost Tesla's earnings and growth margins even further. So how many Tesla shares are you going to need to retire by 2030? Keep watching to find out. The average monthly expense in North America per person is about $3,000. By adding the cost of other miscellaneous expenses like traveling and healthcare, we can round that up to about $5,000 per month, or about $60,000 a year. Therefore, to comfortably live for the next 33 years, you're going to need about $2 million in the bank. This means that by 2030, your total Tesla shares should be worth this amount. For a bull case scenario where Tesla's worth $15,000, you're going to need 130 shares to retire with $2 million. In a base case, at $10,000 per share, you will need 200 shares, and in a bear case, you're going to need $4,000 or 500 shares. For a less volatile investment and income source, you could invest in the S&P 500, which gives a more guaranteed return of 8 to 10% annually. It is important to know that the value of shares required may vary depending on individual lifestyle or living costs. Several analysts expect that Tesla shares will be significantly higher than they currently are by 2030, especially since there are massive transitions going on in the world to EVs. In April, billionaire investor and Tesla bull Ron Barron stated that he expects Tesla shares to continue to skyrocket in the next 10 years. At the time, the Tesla investor already made $6 billion on his original investment. According to him, he believes that Tesla investors are going to make up to 5 times their investment in Tesla in the near future. In 2020, he predicted Tesla to be worth trillions of dollars, and to be a trillion-dollar company by 2030. He further stated that Tesla is only just beginning, adding that the company's stock accounted for about 12.8% of his assets funds under management. And just like Barron, ARK Invest Cathie Wood also considers Tesla to be a very lucrative investment opportunity. The stock expert is rather keen on disruptive innovation, and has previously explained why she thinks this venture is going to scale from less than 10% of the stock market to more than 60% by 2030. Wood considers shares of such ventures as highly valuable, adding that most investors are going to be missing out on unbelievable opportunities. Tesla is highly invested in disruptive innovation, which could be one reason why Wood is so bullish on the company. In 2018, the stock investor made a bullish call on Tesla that placed a price target far ahead of analysts. Wood's call on Tesla's stock seemed rather high at the time, with the highest price target from analysts sitting at $500 and shares of the electric car company trading at $346. Cathie Wood also called shares for Tesla to hit $4,000 and a bear case target of $600. ARK Investments analyst Tasha Keeney also wrote earlier in March that ARK is raising its estimate on Tesla's share price from $1,400 per share in 2024 to a new target of $3,000 by 2025. Cathie Wood believes that there is a significant shift from internal combustion engine cars to electric vehicles. The stock expert had previously cited the drop in gasoline demand, adding that it is a case of real demand destruction that could not have happened without electric vehicles. Since several other analysts have also acknowledged a disruption of the ICE vehicle industry, with some claiming that it's very likely to hit that by 2030, all new mass-market cars are going to be electric. According to a recent report by Worm Capital researcher Cameron Tierney and partner Eric Markowitz, Tesla is likely to dominate the S&P 500 by 2030. In the report, he stated that Tesla's competitive edge coming from advances in artificial intelligence make it a serious contender in the industry. The report centered on a multi-year study conducted on Tesla's various business sectors, all of which have grown as a result of the ever-expanding car company, show that Tesla is aimed at controlling and reinventing its own components, tools, and factories to suit its own needs. It further stated that the car company is far ahead of smaller EV makers and traditional automakers alike. According to the researchers, they expect Tesla's growth to help it achieve a compound annual growth rate of 50% by 2030. They also actually expect net income and free cash flow to accelerate in the coming years, with expanding margin profile to accompany its revenue growth. Musk's Twitter deal may also eventually turn out to be a positive thing for Tesla, as there are indications that Musk will acquire the social media platform. By doing so, Musk will become the CEO of two large companies aside from Tesla, SpaceX, and Twitter. Although there are concerns as to how Musk is going to carry out these roles sufficiently, some analysts also believe that there is not an impossible chance that he could pull it off. When Musk purchased a 9.2% in the social media company in April, landing a seat on Twitter's board of directors, Ron Barron stated that it was not much of an issue given the size of the stake relative to Musk's net worth. According to Barron, Musk's car company is worth $1 trillion, and it's well on its way to being $3 or $4 trillion in the future. Tesla's got several benefits that companies like Rivian, Lucid, and NIO will require years of constantly high revenue figures to enjoy. The car company has the infrastructure needed to succeed in the EV industry. It's got the biggest supercharging network globally, and that puts it ahead of many other EV companies. Tesla also has manufacturing plants in the most important markets in the industry. It has operations in China, the US, and Germany, and they're all top markets for EVs, and that helps Tesla to develop and sell cars faster than other manufacturers. It's also expected that Tesla is not only going to overcome its market challenges, but it's also going to rake in more revenue as it continues to grow. It is noteworthy that several major valuations of Tesla don't include Tesla's robotics business, which is also gaining traction in the limelight. In April, Musk predicted that Tesla robots will soon be worth more than the car business and even its FSD program. Based on your monthly living expenses then, how many Tesla shares are you going to need to retire by 2030? Do you think that Tesla is a profitable investment for retirement? Let us know down below, and don't forget to tell us what your valuation of Tesla is. If you'd like to know what Tesla's been up to in the last few days, then go ahead and click on this next video on your screen. See you there!